Welcome everyone to the Leoson Show, your unscripted stock market news and stock market trend analysis video. This is your host Leoson, and today we will be taking a look at 11 stocks. Welcome everyone to the Leoson Show, your unscripted. We will be looking at Uber, QQQ, SPY, Disney, Nvidia, CVX, Chewy, Carvana, Mara, Intel Core, and Airbnb. So starting off with our today's session, today is Wednesday, September 25th. Going into the open session, we had a run up to 571.89. However, this was a false move up as we began to reject down. Price target for the bears was this imbalance right here. This green imbalance was not affected by the bears in any way, the way that these green bars were. Down, 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 red bar, down, red bar, down, red bar. This was just one solid smooth up. According to Al Brooks, this bar is known as a trend bar. There are two types of bars inside of the stock market. There's the trading range bar and there's the trend bar. Bears were able to successfully take out from the highs of 571.89 and were able to rebalance the trend bar. However, we then began to make our way up into where we are currently residing, 570.95 after a 91-cent move in after hours. So what do we do from here? Well, we were able to successfully take out this green. The high was 570.73. Since we were able to take out this green, we would be targeting the next green, which is 571.24, before a move all the way to this 571.64 mark. That is what the bulls want. If we take a look at the higher time frame, the 1 hour time frame, we see that we are on a perfect route for the top of this range right here. We can add a horizontal line. This horizontal line is denoted as a level. Right around above the level, rejected, broke down. We're having some technical difficulties, it seems, and we're only seeing a small portion of the screen. Are you able to see the screen if I'm putting it like this? Oh, that's a problem. Okay, I muted you for 1 hour. if I do this, are you able to see that? No. Okay, it's gonna go black for a second. Okay, so I'm trying to use the frequently asked questions right now. So I'm using a program called Streamlabs. I don't know a whole lot about streaming services, or not streaming services, but video services, going live services. Can still hear the ping of Discord. Okay, let's try this. How does this look? No, that's still wrong. How are we looking? Excellent. See, that's the problem with being unscripted, you know? Sometimes things are going to work and sometimes things aren't. But either way, it's going to be an absolutely fantastic time because, you know, I'm here, you're here, we're having a great time. It's going to be epic. Okay. Back to what we were talking about. We had a 90-cent move up with SPY during after hours trading. It was just a complete dildo rocket, just completely up. And what this screams to me is that we should be making another move up. So if we see that level 571.41, that was the level we added a little bit earlier. There is a concept inside of stock trading called second entry long. My current understanding of it is we're looking for buying above a bull bar. And if we buy above a bull bar on the second time, right? So we have a bull bar with another bull bar above it. Then we have an interruption, such as a red bar or a doji, or anything like that. Some kind of interruption. And then we have another bull bar. And this bull bar is the bull bar we had right here at 570.99 is the high. However, we're on the 5 minute. This really doesn't matter. If we were to break over 570.99, we would probably make a run. However, I don't think we're going to be able to act on this unless we're trading pre-market. So back to our 1 hour time frame. We see that 571.41 is the high. And we see after taking out that imbalance, we made a run up, had that interruption, and we began a second leg up. In the stock market, it seems that there's 2 legs or 3 legs up. So that's for legs down too. Just 3 legs or 2 legs in general. Since we had that run up off of the imbalance, we could consider that leg 1. We could consider this bar on the 1 hour. We could consider that leg 1 interruption, leg 2. So we should have another leg up to that 571.41 mark. On the daily time frame, we have broken above these old highs, this 561.37 area. We were able to break above that. And remember the second entry long I was talking about? There's also second entry short. And if I am not mistaken, below 568.91 would be second entry short on the daily time frame. So now we can move to QQQ, which is another one of our major indexes. So QQQ, I use 3 different EMAs, which are exponential moving averages, basically saying the 9 EMA, the 20 EMA, 21 EMA, and the 50 EMA is all that I use. I don't use any other types of indicators or moving averages. Occasionally, I'll turn on VWAP. But for the most part, I've found 9, 21, and 50 to be my strong suit. At least, that gives me the best entries. So on the daily time frame of QQQ, we see a break above, well, first, the most significant thing to me that I see after August 14th and beyond, all the way to August 14th, that red doji right there, August 14th all the way to September 25th, the most relevant and important candles I see is this big red candle. Why? One, because of its size, but we also have that big red candle, that big red candle. We have those over there. But mostly because of the fact that that was our big high, our most highest high before we had this move down. And that's a significant move. $484.86 all the way down to $447.56. That's an important number. So if we look what happened around a month later, actually exactly a month later, we see that we're back above and we're trying to break above this high, which we already have. That's interesting because if we're able to break above that high and if we're able to hold, we can go towards all-time highs. You see this candle right here, 502.57. We could break above that, which would give us a significant move up. So this is the daily time frame of QQQ. We'll drop down to our 1 hour now. Back down to it, should I say. We see that we just rode above the EMAs, just continuing to go up. However, we zoom in and we find something pretty interesting. Reading left to right, right? Like a book. Most people don't read books anymore because most people are lazy and don't like to read. I don't read as much as I should, but I know how to read. And I read left to right. I mean, certain books you don't read left to right, but I read left to right in the market. Because I'd like to continue acting on the right-hand side, right? So, if we look, we see that we have... Now, let me backphrase a little bit. Let me backstep. Al Brooks considers gaps not necessarily just traditional gaps such as these right here, which have just an open to a close. But there's also gaps above EMAs. Al Brooks talks about this, and so I'm going to speak on it to the best of my knowledge. We have a gap from the EMA right here. Right here we're touching, but then we have this gap. So we try to break above. We do break above. We go for a scalp. 487.10. Sorry, 482.81 being the low to 485.55 being the high. We go for more than a scalp. We go for a swing. But then we protract back to the EMA. And we continue to hold this until the second time that we gap. We gap above and go back down to the EMA. Now look at the high of this, 484.53. And the high of this is 485.55. So a 2-cent difference. So I'd like to add a level there, because that seems important to me. Every time we were able to hit this price, we went back down to the EMA. Now what about this time? We're far from the EMA, especially the 50 EMA. And we just broke above this candle right here, this 487.79 mark. If we drop down to a lower time frame, we'll drop down to our 15-minute because I'd like to see what happened after we broke above that old high. And again, we were mostly staying next to the EMAs the entire time. Couple gaps here. We had a low. Went back. Now we have a significant range here lasting multiple bars. Excuse me. This is called a trading range. And we'll go back to this in a second. But let's just talk about this area right here. Let's denote it with the rectangle just so we can see it easier on the 5-minute. As you can see, this was mostly a range, a trading range, until we had a breakout. Going to the left, we're still above significant highs, such as that one right there. Or I'm sorry, we're still above significant lows, such as that candle right there, 484.32. And why that's a significant low candle to me, even though we go lower right here, is because, and you could call that, however, that's pre-market, and I don't usually like to trade off of that data. That's pre-market too, but within an hour, a little over an hour from the market opening. And we just continued to go high. So if we broke that low, we'd be looking for shorts. At least I'd be looking for shorts. Don't be retarded and throw all of your money into my ideas, because my ideas are likely to be wrong. I'm just showing you what I see and what I think inside of the stock market. So we can add a line to this area right here, right? The old highs. I'd like to add it to 487.68, even though we broke above by another 10 cents, 11 cents. I just like that the close was 487.68 and the open was 487.67. So pretty close together, obviously, because it was the close of one candle to the open of the next. But I just like that as a significant level. So again, similarly to SPY, I'd be looking for a trade over here above that. Although I would have also liked to buy it down here when we started breaking out of the range. Back to the 15-minute. We see we break above this high. And now is the really important time, because like we mentioned earlier, this right here is a significant high, 485.54. And we were able to get above it and run $2.15 during after hours trading, which is absolutely ridiculous. That's not such a bad trade. So now we're going to be looking for a move at least to this old high. And that's because that's the prior breakout attempt. That one went above it. So we could be looking for a trade anywhere inside of here. If we aren't able to stay above it with heavy volume, and I would see a move down to the EMAs, potentially even targeting the low of this candle, 470.17. The next stock we'll be looking at is Uber. Uber, we kind of missed the entry. At least, Uber, the entry was earlier. Because, see, we're targeting this area. This range, right? We talked about it. But we have entries down here. And we have entries over here. So now that we're up top, we'd probably still have a couple dollar move, but it's harder to enter here. Especially since we're about $1 away from the 50 EMA. And we broke above old highs here. Old highs is roughly where 50 EMA is right now. If we draw a channel, we see that we haven't broken the trend. So likely, if I had to be in the market right now, inside of Uber, I would be going long. However, I will look for a different setup first. Remember what we were speaking about with second entry long. First entry long, pull back to the 9 EMA on the 4-hour time frame. Above 77.74, we should have second entry long run to new highs. But it's just choppy here on the smaller time frames, so it's harder to find a trade setup unless we looked on those higher time frame charts and played it with the higher time frame bias. We could be going to this 81 area, this 80-81 area. We would need to hold if we were to get a pullback through this whole range. Through this whole leg up. Our stop loss would need to be right around here, below 73.45. Why? Because unless we'd like to put it below 67.12, below this whole move up, that was the low of this leg. We'd be looking for another leg up, probably getting us to that area I mentioned earlier. It's 81, 80 area. The last time we broke above old highs, like this, we made a run to all-time highs. That was where we are right here. We're at 487.97. This is level at 487.68. We ran to all-time highs last time. Now we're trying it again, I guess. We're not trying it again, but that's where we're at this point. Our next stock is Disney. So with Disney we've traded from very low, from 123.17, which we were actually short Disney. However, ever since 83.91, we've been in a uptrend. So what are we looking for in Disney? It's a hard question because we kind of missed the entry. We'll take down from the 1 day to the 4 hour. Disney, we're still looking like we're in a bullish trend, though. We have not seen the 50 EMA for the 4-hour in multiple candles. If we were to trade down to the 50 EMA from right here, that would bring us to this low. Or no, I apologize. That would bring us to nearly this low. However, on the 1 hour, we just traded back to the 50 EMA, and we've been hugging it for a while. I'd like to see continuation of this heavy bull bar. So I'd like to see what happens above 94. For a move up to 94.88. With heavy trims around 94.57. My stop loss below this candle right here, because it was the low of the candle before the first attempt up, which makes it significant. And that would be 93.35. So set stop loss 93.32. A couple cents lower. If we go back to the 4-hour, we can see that we could take out all-time highs. Or, not all-time highs, this is Disney. We could take out trend highs. However, I'd like that 94.88 move, 94.57. Now our next stock is Nvidia. And Nvidia, we're still on a path to these 129 areas. This is the range. However, the earliest entry was, the earliest sell was above here, 124.42, which we're above it in after hours trading. If we drop down from a daily to a 4-hour, we see a nice move from this area over here. And we've only been breaking out, which is interesting. We had a nice breakout. Then we started forming a channel. Turned into a trading range. Now we broke out again. Trading range. Breakout again. So now the question is, was the high of right here the prior breakout attempt, which is 124.12, was that price target for the bulls, or were they trying to target the top of the range? A nice uptrend. However, we are very far from the 50 EMA. And we're far from the EMAs on the daily by quite a couple dollars. The last time we were away from the EMAs, we traded back into them. Away from the EMAs, traded back into them. So the question remains here is that we have not answered yet is what is going to be our trade idea for NVIDIA. NVIDIA is a tough one because NVIDIA we missed the breakout attempt. We're past that. We're still targeting the top of that range. However, I'll be waiting for more of a trading range first. It could work for a scalp up to 124.93 to take out old highs, but I'd like to wait more for a trading range. This is ranging right here. There's nothing wrong with waiting for the 50 EMA and turn down here, or at least observing what price does around here. So even if we end up taking off and I was wrong, I probably will eyeball it again around $123.20. So I denote my watch list as whites, oranges, and greens. That's what I've been doing recently. Whites are just the kind of general observation. Oranges are a concentrated observation. And greens are a stock that I would like to potentially perform a trade on. By concentrated, that's what I was explaining earlier. Seeing what I'd like to watch in price. And by general, I mean just observing what happens on a day-to-day basis. So Chevron is our next trade. Chevron has a really bloody red. And as you can see, second entry short. This is our first entry, and this is on the daily time frame. This is our first candle, our signal bar, 144.93. Below that, we ended up trading down, working our way for a swing down. We grabbed price, bulls put it back up. We then had this red day. Below that is 146.91. That's the low. 146.91, and we ran back down to trade again around 143.44, which was the low of the first entry. We'll drop down from a daily to a 4-hour time frame. We'll redraw our channel and we'll change the colors just to make it easier to see. We'll change it to white. Now, there is also something inside of channels. Channels continue going up and up. If it's a bull channel, keeps going up and up and up and up and up and up and up. But instead of a breakout like NVIDIA, which it was just straight up, we kind of have a rocky up. Bears want their slice of the pie and bulls want their slice of the pie more. So there's some kind of rocky competition there. That's a channel. Up, sideways, up, sideways, up, sideways. And we continue doing that until we form a trading range. We usually form a trading range after a channel. For bulls to, or for bears to take on a trade, they're looking for some kind of entry that signals weak bulls. If we look at the 4-hour time frame, although we could even look at less, we see that the bulls overshot the channel. We tried to break out of the channel higher than was currently allowed. After the breakout of the channel, we rejected and reversed. We reversed, touched 50 EMA, touched all the EMAs, and went down to 143.40. Again, for the low of the first entry. For a trade right here, we'd be looking for a break below 143.44. If we can break below and hold below, 142.65 is next. And as low as 140.12. Again, we'll draw a level. So we have the Fibonacci tool. And the Fibonacci now this is a neat tool on TradingView, and one of the reasons I like TradingView's charting setup is so much is because TradingView allows numbers and allows different colors. So you can see if this is a 50% retracement for Fibonacci or 62.5. Here there's just lines, so you just have to learn it. You have to learn it, and I haven't gone through the process of learning it yet. But there's the Fibonacci here, 144.97, 145.78. We also see the exponential moving averages are pointing down, but they're starting the curve. They're slowly starting the curve. I'd only be bearish on CVX here. We might have a run up, but I would just be looking for shorts. But again, the entry was below 146.91. Our next stock is Chewy. Chewy, I would be bearish on.